Good afternoon, ladies and gentlemen, and welcome for the next installment in the Admiral Markets Trading Spotlight webinar series. And today we are here to talk about how to trade the GBP. We appreciate here at Admiral Markets that we've had rather a tumultuous few months, and we hope that you're all safe and well. And we really fantastic that you're all here to join us today to further your trading education. And so it's really great to see you all. And what we'll be doing is we'll be talking about how to trade the GBP, and at the end of the session, we'll actually switch across to live charts and look at the live GBP market. So stay with us till the end. If you have experience of trading the GBP already, just please put it in the chat box. That would be really helpful. That'd be great. If you're completely new to trading, just let us know in the chat box. It helps me understand, where we are in terms of who's here with us in the room. If you're watching this later on demand on the Admiral Markets YouTube channel, then if you found it useful, please give us a like. And also, if you have any particular questions or thoughts, drop them there in that question box, and we'll be happy to help you and engage with you. So, what am I going to talk about today? Well, as we said, it's about talking about trading GBP. And the question is, what makes the GBP special for traders? And, what does a trader need to be aware of when trading the British pound? How can we actually analyze the British pound? And how can we trade the GBP most effectively? We'll talk about just a very simple GBP tactic. And as I said, we'll have a look at the GBP in the live markets. Now, it seems to be a rather recurring item that whenever I do one of these particular sessions on a particular either instrument or a particular style of trading, invariably that we are in the middle of a period of volatility for that particular instrument. And at the moment, I think that's exactly the same for pound sterling. It's been a rather tumultuous few months within a rather volatile few months for markets anyway. So there'll be plenty for us to look at on the live markets, plenty for us to talk about. So as I say, stay with us and we'll switch across to live markets at the end of the session, so we can actually just have a look at what the kind of ideas and concepts that we discuss here and how we can actually sort of utilize them in our own trading. But thanks for joining. Plarman there says, hi, Paul. Hi to all friends. It's great to see you here, Plarman. And, got someone else there saying that, important will keep your lot size as small as possible when trading GBP. And that's not bad advice. Okay. Risk management is always key. And what we'll do is as we go through the session, I'll talk a couple of comments about why that is important when it comes to GBP. So there's lots for us to touch upon, lots for us to cover. And as I said, I appreciate we always have a broad spectrum of experience in the room. Joining us here from people who are complete beginners to very experienced traders. So please, if you've got experience, please share that with us. I'm always fascinated to hear other traders' own kind of journey. And also, if you're new and if you have questions, please ping them in the chat box, and you'll find that we're very happy to engage with you and help you as much as we can. If you don't know me, my name's Paul. Okay, I've traded for many years for both hedge funds and clients. Primarily, I like to focus on FX indices and commodities for myself, and I like to try and trade sort of swing positions in trends, and also kind of be a mean reversion or reversal trader when trading on an intraday basis. And here we are, Admiral Markets. Okay, as you can see, we have a broad range of financial instruments that you can trade, and are, have a sort of global reach there with kind of regulated across several regulatory environments, providing competitive spreads on the most popular products and the ability to sort of trade using MT4 and MT5. And if you have any more questions about that, get in touch with your account representative, and they'll be very happy to help guide you. But here we are, how to trade the GBP. So just a quick question for you all. Who trades the GBP at the moment? In the chat box, just ping away if you have experience of it, okay? And if you do trade it, how do you trade it? Are you trading on an intraday basis? Are you trading on a swing? Maybe you're trading a longer term end of day position trades. It's good to know how you engage with the GBP at the moment. But the reality is, one of the reasons that GBP is still a very popular trading instrument is, you know, regardless of the changes we've seen in the world and the changes that are undoubtedly coming, London remains the world's #1 location for foreign exchange trading. Okay, a vast majority, okay, of foreign exchange trading goes through the London banks during the London session, and so with that, not unsurprisingly, there remains a lot of interest in trading the Great British Pound. What we'll do today is we'll shed a little bit of light on some specific GBP traits that traders have to take into consideration when you're engaging with the British pound sterling. And in this session, we'll discuss trading the GBP and what traders need to be aware of when engaging with the GBP in their own trading endeavors. As I said, I appreciate there's people here from all sorts of experience. There's people here who try to intraday trade, people here try to position trade. And what we'll do is we'll talk about all that kind of spectrum as we go through the remainder of the session. But as I said, if you have experience of it already, just ping it in the chat box. It's always good to know, who we have here with us in the room. So, if you're complete beginner to foreign exchange trading and you're not really sort of still learning entire ropes, well, the GBP, it's the UK's currency, and it's normally known as sterling. You'll hear that's how it's referred to. Like the rest of the FX market, it will trade 24/5, but you'll find that the main hours that the majority of the institutions are trading will be between like 8 a.m. London time to sort of 1600 4 p.m. Now, of course, with the sort of the advantages of the FX markets, we can here, when I sit here in the UK, we can start trading from sort of Sunday evening at kind of like 10-11 p.m. through till around about 10 p.m. on Friday evening. Okay, so there's even though there's main hours, you can find that there is still, as part of the FX markets, there's still that kind of 24 hours moving. However, what you will find is most of the major sterling traders are going to focus on trading the early morning European session. So, in London times, what we're looking at there from about 7 o'clock in the morning through till about sort of 11 a.m. in the 11 a.m. London time. Okay, and there's that window changes a little bit. Okay, and it adapts based upon world events and volatility. But as a general rule of thumb for completely new traders, that's when you'll find the majority of the sterling focus, okay, comes during that early morning European session. And we'll look at that we'll look at that when we move across to the live charts. So, when we look at what makes the GBP special, well, there's quite a wide range of things that makes the GBP special. In terms of volatility, yes, it can be a volatile instrument. Okay, and you hear lots of traders talking about how they need volatility in market, but volatility is a double-edged sword, and we'll touch upon that later on in the session. But what it can provide us with is strong trends. Okay, so if you're a trend trader, okay, and as I said earlier on, I particularly like to trade trends on a sort of swing basis. Okay, so maybe positions for a few hours, few days, maybe a few weeks. The GBP pairs, okay, provide us with that opportunity. However, there can also be quite sudden reversals. Sometimes those sudden reversals can be, how should we say, they can be telegraphed. You can read the price action and see and expect that there's an opportunity for a reversal to happen. Sometimes those reversals can change just like that in the GBP. And what we'll do is we'll talk in a few slides why that can happen, what's been going on. And also it has a good sized ATR. So if you're new and you don't realize that, it's good sized average true range. So what we can say is that, with the pound pairs is that, they have a good range. Okay, they make good movements during the session. So the opportunity for you to sort of take a trade and be able to ride that trade, especially as an intraday trader, well, there is the opportunity to sort of trade that on an intraday basis because there is a good thick, average true range. So what we also are kind of looking at here is that what makes a GBP special is that it's risk sentiment. Okay, and it's a case of that GBP we're finding, especially during this particular moment, is that it is sensitive to risk, and we'll talk more about that as we go through our session. And also there's a real sort of kind of risk on sentiment. So when we feel that there is, there is that, markets in a very kind of binary, almost kind of polar opposites. We talk about markets having a risk on sentiment or a risk off sentiment. GBP tends to stay in the risk on sentiment, namely when markets believe that there is a risk on sentiment in play, and that actually people are aggressive and they're embracing risk. Well, that tends to work well for the British pound. Alternatively, when risk moves off, well, then you normally see sort of money flooding towards the Japanese yen and the Swiss franc. So it sits in the risk on sentiment sort of a pile, and you just need to be aware of that when you're looking at the kind of bigger picture in terms of understanding whether the sort of what kind of market sentiment we have with regards to risk. And finally, and what has made it quite a lot happening there is, of course, is the sort of, how can we say, the kind of overlying wrapper that is Brexit at the moment. Okay, and if those of you who've been trading for several years, you'll realise that that Brexit has had a huge impact upon the British pound sterling, both in good and bad ways. Okay, but you need to be aware of it now. People think that actually we're through the end of it. We're not. There is still actually a good few months of this to go on, and we'll talk about that a little bit later as we go through. But those commentary or that kind of political statements that carry on, especially around Brexit, they can actually have huge impacts on shifts and moves within the British pound. Okay, and in particular, that's one of the things that contributes to when we said earlier on about how you can have sudden reversals. So, Plowman says there, he's sharing his trading experiences. Paul, I had 2 losses last week, pound against Aussie, pound against Swiss franc, after the Bank of England rate announcement, but with reduced risk, of course. Okay. So, thank you, Plowman. Right, we appreciate you sharing, sharing your experience. Okay. And, sharing that you had a couple of challenging trades. All traders have that. Okay. That's actually, it's part of everybody's experience. And it's actually about how, A, you're ensuring you're managing risk, but B, also, how you deal with that, how you actually work through having those 2 losing trades and being able to learn from it so that you can actually move forward and be better in your future endeavors. My own opinion, this is my personal kind of as a coach, I suggest that always kind of try to trade around things like the Bank of England rate announcement. It is you are accepting a good deal of risk, and with that means that there is the opportunity for greater rewards, but also there is the opportunity to take losing trades. And maybe that's something we'll have a little look at when we move across to the live charts plan, and maybe that will help you and other people understand. So just a couple of people have said that the kind of maybe the video has disappeared. So I'm hoping that you can still hear me. I hope you can still see the slides. I hope that you can actually see me as well. Well, some people think that's nice. That's a personal choice, but hopefully you can still hear me and see the slides. And if you can, that would appreciate that. If you just ping that in the chat box, that would help enormously. So Peter says, yep, video and chat are okay. Chuka says yes. Tyrone says all good here. Excellent. Robert, excellent. Okay, so sometimes when you're rattling through the webinar, wanting to get in as much, sometimes you have to just make sure that everybody can still see and hear you, and that we're all here in the room together. But that's super. Samuel says that's all good. Excellent. That's great. Super. That's good to know. So, in terms of making, what makes that GBP special? Well, one of the things is that, as I said, London is still the #1 spot in the world for spot FX, okay, trading. And we can trade, pound sterling against the major other FX pairs. And for a new trader, okay, who's looking to understand, well, what should you be focusing on? Well, I'd be saying if you are, certainly if you're in the European sort of time session and you're looking to focus on trading the pound pairs, well, then you're in a position to sort of trade the pound against those major other FX pairs. Okay, so you've got the pound against the US dollar, the pound against the Japanese yen, the euro against the sterling, the pound against the Swiss franc, and the pound against the Aussie dollar, the Kiwi dollar, and the Canadian dollar. You will find that there are other what are termed exotic pairs. Okay, so these are normally sort of emerging market currencies, and you will find several of them are offered on the Admiral Markets trading platform. But my own suggestion for new traders is to just focus on the kind of major other FX pairs. And you can see here, and I'll show you when we move across to the charts. Let's use up our drawing tool here. Let's just bring this up. We can have a, what I have, and I'm sure some of you who've been here, sort of many times, I have a profile set up for each of the major currencies. So in the same way, I have a profile here for the British pound. So and what I have here, okay, is pound against the dollar, the euro against the sterling, the pound against the Aussie, the pound against the Canadian dollar, okay, the pound against the Japanese yen, pound against the Swiss franc, pound against the New Zealand dollar, and then I have the FTSE here, okay, the FTSE 100, which is the UK's main equity index. We did a session on that maybe a week or 2 weeks ago. So if you want to understand more about trading the FTSE, then by all means go and check that out in the YouTube webinar archive. You'll find it there. But as I said, what I have this profile here, a British pound profile, so I can just literally, at one glance at the screen, I can get a little bit of an indication of, where the sterling is strong, where the sterling might be weak, whether there is a risk on sentiment or whether there is a risk off sentiment. So all of that helps me very quickly just build a picture about what's going on in sterling, so that then I can start to actually build a little plan, okay, a little plan about how I will trade the sterling for the forthcoming session. So, and I'll show you how how I have that set up. I'll show you how that helps me, okay, as we look at the charts in a short while. So as I said, there are exotic pairs there that you can trade, and some of them might be more relevant to you, because I appreciate we have a global audience here. I appreciate we have people join us here for our sessions from all over the globe, and you're very welcome. But what I would be suggesting is for new traders, normally just focus on the major or the trading the sterling against the major other FX pairs to begin with. So, when it comes to analyzing the GBP, is there anything that we really need to be aware of? Is there anything that specifically that makes it different from all of the other FX pairs? Generally, not particularly. There's one or two nuances as all, which we'll talk about in a moment. But what we find here and what we've talked about for as long as the Trading Spotlights webinar series has been running is about building up just a simple routine. Okay, simple routine that you can employ day after day, week after week, month after month, quarter after quarter, because actually having that routine is what will help drive you forward in terms of your own trading progress. So, what we have talked about always is about, when you look at any asset class, okay, or any particular instrument, whether it be the pound sterling, whether it be gold, whether it be silver, whether it be Bitcoin, whether it be the Dow, whether it be Amazon, okay, it doesn't really matter. You have to just have a very simple routine to begin with that basically allows you to make sure you're doing the right thing time after time whenever you're looking at markets. And that's what we talk about, as soon as you open a chart and anything, you identify levels of support and resistance from the monthly, the weekly, and the daily charts. Secondly, you want to identify, is there a trend? Okay, is there a presently trend? And what I always say to people is that a good trend will leap off the charts at you. Okay, if you need to force it, there probably isn't a trend there. Okay, and that's fine. You just want to know, is there an uptrend, is there a downtrend, or is there no trend? Okay, and that's what we'll look at in a little bit in a moment. In terms of, looking to trade with a trend for swing positions, okay, well, that's what we want to do. If we identify there is a trend, well, then, we want to look to trade with the trend. And then we can do that either using breakouts, okay, as price moves to either new highs or new lows, or we can use kind of pullbacks on there, okay, which is my own personal way of doing it, but everybody has their own way, okay, to look at how to trade with the trend once we've established there is one. And if there is no trend, well, you can look to trade reversals or mean reversion, especially for sort of shorter time frames. And so that's actually looks at how I employ, okay, on a kind of longer term basis. If there's a trend, I want to try and trend with the dominant trend. I never really want to fight it. I don't see the point in that. And equally, if there is no trend, okay, in a shorter time frame, well, then there I'm looking at kind of mean reversion, okay, price pushing out and then actually pulling back into the middle, or price pulling out and there being forming particular reversals. So we'll have a look at that in a moment, okay. But it is, as I said, it's more about just having that simple routine, and it doesn't matter whether it is pound sterling or Bitcoin or silver, etc. Okay, have yourself just a simple routine that you follow, because you'll find that that will help you enormously in terms of just being consistent and being disciplined. Okay, and those are two traits we hear time and time again in terms of being a good trader, and actually that's what we're trying to help you with and help you build in your own trading endeavors. So, as we said, in terms of how to trade the GBP, okay, identify if there is a present trend, okay, and we're looking to trade with the trend for particular swing positions. Let's use the old drawing tool here, okay. So this, I've a couple of charts here. This is the euro sterling on the 4-hour chart, okay, and hopefully you can identify that this is just a kind of a nice trend that we are seeing kind of playing out here. Price is above the 20-period moving average, it's above the 50, it's above the 200. We're making higher highs and higher lows. Remember what I'm saying, don't try and force it, okay? Don't try and push it and force it, okay? If the good trend, they will jump off the chart at you. And alternatively, pound against the dollar here, okay, we can see that basically price is just making lower lows and lower highs, okay, which is just effectively just giving an indication that we are in a downtrend. It's also beneath those kind of 20, 50 and 200 period moving averages, and that's what we're kind of just looking to try and presume. Tyrone asks me a question saying, those moving averages used, Pauls, are they EMAs or SMAs? I just use simple SMAs, okay? I use SMAs, 20, 50 and 200, blue 20, red 50, green 200, just very simple. If you want to learn more about that, well, you'll find that I did a session a few weeks back on just a little bit of a deep dive into using moving averages. That will be on the Admiral Markets Trading Spotlight, okay, webinar archive on YouTube or on Traders Yard, etc. So please, you can find out a little bit more there. But yeah, I just use SMAs. Nothing terribly special or fancy. As I say, it's more about being consistent and disciplined in your approach. That's what will help you the most. So, as I said, for myself, in terms of, building a little bit of a plan, if there is a present trend, personally, what I like to do is, I personally like to look at trading pullbacks myself, okay? And then I'm going to use price action candlesticks to identify those entries. If you're new and you're still trying to understand price action candlesticks, once again, you'll find myself and also my colleagues, Marcus and Jens, we've all created, lots and lots of great content on the Trading Spotlight webinar series, all about different ways of understanding and trading price action candlesticks. And so I would most definitely recommend go and find them on the YouTube channel. By all means, have a look. And if you like them, give us a click. If you've got questions about it, please just ping them in there. You'll find that we're very happy to sort of help answer questions from people to try and help them. Or alternatively, come across and join us in Traders Yard, okay? The slide at which will be at the end. And then you can actually sort of hear and speak to us about, your own particular trading challenges. But as I said, some people like to trade pullbacks, okay, using price action. Other people will like to trade breakouts, okay? So, I've said this all along, is that, when you boil all the trading methods down, the vast majority of them are either a break of a line of support resistance or a bounce off a line of support or resistance, okay? That's it. And it's about understanding, which one works for you, which one resonates for you. I can trade breakouts, and I'm quite happy to trade breakouts, but I find personally, what resonates with me is trading pullbacks in a trend. I find that much more suits my particular personality, and I'm very happy with that. And I would suggest that that everybody has to find what they're happiest with, and the way you do that is by taking trades, by keeping really, really good records of your trades, so that you're able to go back and look at a sample size of 20 trades and find out which of your breakout trades worked for you, which of your pullback trades were better for you, which ones were easier for you to consistently and with discipline just engage and execute time after time after time. trading, trading is challenging. Okay, you don't need to make it any harder than it needs to be. Just keep it nice and simple. Find what resonates with you. Keep great records, and just slowly but surely, just keep improving as you work at your trading skills. And as we said, if there is no trend present, well, then I'm particularly looking for to trade, kind of reversals or mean reversions for intraday trades. So, one of the things I particularly like to look at is the kind of maybe false breakouts of the Asian range, or particular looking at maybe kind of reversal patterns. And once again, as I said, I think there is some great content in the Trading Spotlight webinar archives. Be sure to go and check that out, and you'll find that there's plenty of content from myself, and as I said, from my colleagues Marcus and Jens, who will talk all about various types of reversal patterns and how you could utilize them. So just particularly looking at here, this is a pound against the yen on the 15-minute chart, euro against the sterling on the 15-minute chart, and I've just sort of blocked in there. That's the kind of the Asian range, okay, there of the of where price is traded between, the range within that in terms of its overnight, certainly for me, it's overnight kind of price action during the Asian range, and when I like to see it when I see price kind of sort of putting in false breakouts of there before it goes to the other way. Okay, that's one of a nice simple way. I like to trade kind of as I say, mean reversion tactics on sort of on GBP pairs that are not trending at that particular moment, and there's lots on that, and you'll find that I think I did a piece once again in the webinar archive on sort of intraday FX trading. I think I did I think about a 3-part series earlier on in the Trading Spotlight webinar series. So please, by all means, go and check that out. You'll find that there's a sort of treasure trove of great information in there that will help you with developing your own trading styles. So, here's a few points that we've learned before we switch across, and it's a case of, as I think I said a bit earlier, the volatility in the pound sterling, it is a blessing and a curse. Okay, when you're on the right side of the volatility, well, then that's great. When you're on the wrong side, that's challenging. Okay, and that just brings home how important risk management is. Okay, trade after trade after trade, and that doesn't really matter whether you're trading sterling or Bitcoin or silver or the Dow. Okay, risk management is key, because as I say, when the volatility comes your way, then that's fantastic. When it's against you, that can be a challenge. As we sort of alluded to it a little bit earlier, is that during the Brexit negotiations, the pound sterling is very sensitive to news, okay? And that news always beats the technicals, okay? Even though the technicals might be putting a lovely picture together, you might be able to see a lovely trend in place, it might be actually just, following through absolutely perfectly. The reality is that, once the politicians talk and once the politicians make their announcements, you will find that basically, that will have huge impacts on the pound sterling and also a little bit on the euro as well, okay? So you just need to be aware of that. You need to realize that during particular parts of the negotiations, and now we've, I think we're towards the end of, deciding that there's not going to be an extension, okay, in terms of the transition, and then we're having a conversation about the sort of the trade deal. You'll find that little snippets of news coming out, okay, will have impacts on the pound sterling. So that makes it very volatile. But as I say, it's a blessing when it's on the right side of it. It can be a challenge when you're on the other side. So just be aware that if there's particular days or particular times when negotiations are going on, well then GBP will be very sensitive to the news, and it will beat your technicals, okay, because it's new important information coming into the market, and there will undoubtedly be a kind of knee-jerk reaction to it. One of the things that is important for you to know, especially if you're going to be an intraday trader of the GBP, is that most UK news items are released at 9:30 a.m. UK time, okay? Not all of them, but the vast majority of them are, okay? So what we suggest is, make sure you are out of your intraday positions by then, okay? And the reason being is that, carrying a position into a big major UK news announcement, well, as I said, there's a lot of volatility there. So it can be that can make it a little bit challenging for traders. Okay, so my own suggestion is, and what I try to follow myself is that 5-10 minutes before major UK news is announced, is that I'm actually flat from my sterling positions, my intraday positions. Okay, because I know that there's going to be a huge amount of volatility in place, and it kind of a little bit not unlike the sort of I think it was Plowman who said earlier on about his experience trading Bank of England rate announcement. Now the Bank of England rate announcement normally comes out normally first Thursday of the month about midday. And so it's a case of that can be a rather volatile period there. Okay, and so once again, my suggestion is don't try and trade through that rate announcement, because it can be enormously volatile. One of the things you can pick up is, just look for differences in the way price operates and moves between the 7 a.m. Frankfurt Open and the 8 a.m. London Open. Okay, remember, Frankfurt opens, it's, Frankfurt, because of the time difference here, certainly for the UK, Frankfurt's opening at sort of 7 a.m. London time, and then you have the London Open at 8. And sometimes that hour between 7 and 8 can be very, very useful. Sometimes the price will just do what the price does. Other times it might be giving you an indication that there is a strong trend either coming into the market, or it's going to continue. Or alternatively, sometimes it can tell you that it's the last push before you get a reversal during the London time. It's almost like a final kind of false breakout. And you should also be aware of what's known as the London fix if you trade GBP in the afternoon. So there are a couple of different fixes. Okay, some for some for the commodities, metals, etc. But there will be there's a time at which the certainly used to be kind of like spot FX price, and also it will be fixed so that for people overnight for LIBOR, for the actual interest rates that are carried overnight. Okay, for bank lending are known, and so that that normally there's a window there. Okay, normally a window there. You'll sometimes see from about 3:45 till sort of 4:15, 4:30 UK time, within which there might be an element of volatility you see in there around that. Okay, it changes and it moves. Okay, but it's a case of you want to be aware of that if you're trading GBP in the afternoon. As I said, the majority of the business, okay, is done in the early morning European session, and then in the afternoon, well, it's most of the big traders are focusing on the kind of on very kind of US indices, or the kind of US focused entities. So here's a little sort of trading tactic that you can take away and work on. Okay, as I said, some people like to trade pullbacks, some people like to trade breakouts. So here's just a little simple London breakout trade that you can do. And what you're looking at is you're looking for it works in the London to open at 8 a.m. So you're looking to look at the 60-minute candle that finishes forming on the GBP at 8 a.m. London time. And just be aware that, of course, if you're using the MetaTrader 4 platform, that their timing is a little bit different. They're 2 hours ahead, so you just need to take that into account. And Robert just says, are those videos under Admiral Markets on YouTube? Yes, if you look at the Admiral Markets on YouTube, and then if you'll go into the Admiral Markets channel, you'll also find the sort of trading spotlight webinar series there. I'm sure my wonderful assistant here might be able to put in a link there that can take you straight to it, so you can actually to look at it. Okay, so Plowman says my positions was already open for a few days, okay, before, and I had pending orders on pound Kiwi, but I deleted it after the Bank of England event when I saw the price began to fall down. Okay, well, it's a case of, as I said, you've had swing positions running into it. As I said, I when it comes to the big news like that, I think it's better for traders to be flat going into it, because you have no idea what happens. And that was quite a volatile news announcement there last week, and we'll have a look at that. We've got a few minutes left. So, but here's, as I said, a simple kind of little breakout strategy for you. So 60-minute candle that finishes forming on the pound at 8 a.m. The range of the candle is 40 pips or more. then ignore it. There is no trade because the market's already moved. What we're looking for is price to be quite compressed and then for it to blow out from there. As I said, if the range is less than 40 pips and there's no trade, if the for the candle, look to buy at kind of 2 pips plus the spread above the high, and for sells, look to sell at 2 pips below the low. The stop is 1 pip inside the other end of the candle. So for the buys, okay, the stop is 1 pip at above, and the sell is at 1 pip below the high. And you're looking for initial target of between about 22 to 25 pips. And then you can use a 3-bar trailing stop should you wish to run your trades as much as possible. And you can see there in the chat box that my assistant has been able to put in a link there that you can find all the Trading Spotlight webinar videos there. There's plenty of fantastic material in there from myself and my colleagues Marcus and Jens to sort of cover all sorts of fantastic trading things. So what you just need to be aware of if you're going to trade a sort of a breakout like what we've just discussed is that you just need to be wary of if you're right next to sort of support and resistance or pivot or fib levels, which may have sort of hinder the move. You also want to be aware of whereabouts of the major moving averages, things like the 200 period moving average. Maybe you might want to sort of include things like the direction of the 60-minute MACD, depending upon if you use indicators. And you also want to just look at candle patterns. Okay, so is that sort of 8 a.m. candle, okay, the one between 7 and 8, is that perhaps like an inside bar? Is that showing you where the market is resting before it gets ready to surge? And if you particularly like early morning breakouts, you might want to look even at kind of the 7 a.m. candle on the pound against the dollar, the euro dollar, and the pound yen, if particular early morning breakouts are your particular preferred trading if they are your preferred particular trading style. And here, here's an example here where this here is the 60-minute candle. Okay, that's from 7 till 8, and then we can see in this particular case that kind of price certainly does break and explode up there. Okay, and then we can see price moves up for most of the rest of that kind of morning before the momentum runs out, and that's what we're and that's what you're particularly looking at here. And then the next day, okay, the next day on the same candle, okay, we have a we have a bearish candle, and actually what we can see is that price is just the start of the bearish sell-off during the kind of London morning session. So that's as I said, just in 2 days, you've had a strong move to the upside, and then the next morning a strong move to the downside, and that's what can actually very easily happen. So, in conclusion, ladies and gentlemen, the pound sterling is a popular trading instrument based on London's location and the time zone. Traders like it because it's volatile, it has strong trends, and it can have very good-sized moves. But you have to realize it's also sensitive to risk sentiment and Brexit news. When it's trending, trade with the trend. Don't try and fight it. When it's range bound, well, then maybe look for reversals or mean reversion trade opportunities. Trading the London breakout at 8 a.m. is very popular, and you need to be aware that the most important UK news comes out at 9:30 in the morning, and you want to be you don't want to be caught on the wrong side of that. So we'll just switch across to have a look at the charts and see what's been going on, in the last couple of days. Just before we do that, if you want more support, okay, from ourselves here at Admiral Markets, well, then you can join the exclusive Trading Spotlight community on Traders Yard. You'll find that my colleagues Marcus and Jens post some fantastic material in there. I will be in there for the rest of this afternoon, so you're able to come in and join. If you've got questions, you can fire away. And you can see us there by joining the Trading Spotlight group at tradersyard.com/group/312. And don't forget to join us next time when we'll have my colleague Marcus. He'll talk to you about 6 ways to avoid emotional trading, including the dangers of it, how to manage risk, and 6 tips to keep your emotions under control. And you'll find that that's on Wednesday, 24th of June, 2 p.m. London time. Check your inbox for the webinar link or head over to the Admiral Markets website where you can sign up. And you'll find lots of resources, okay, and analysis and education on the admiralmarkets.com website. If you want to contact us, well, you can contact us here at hello@admiralmarkets.com, or as I said, you can find us on youtube.com/admiralmarkets or facebook.com/admiralmarketsglobal. So I hope you found that useful. That'll give you a little bit of insight into the wide range of even just of trading the pound sterling. And if you'll bear with us for a moment, what we'll do is we'll switch across to the charts, and we'll have just a couple of minutes looking at what's been going on with sterling today. Omar says thank you. You're very welcome, Omar. And Rob says thanks for link. You're absolutely welcome, Rob. Great to have you here. Okay, so hopefully you can see my slides here. There we go. Let's just looking at elements there as before we switched on. So as I said, ladies and gentlemen, what I have done here is I've got this is my British pound. Let's just bring up my tool here to draw. What I've been doing is I've got my here we go. Let's bring up the drawing tool here. Yeah, we're good. I've got my British pound profile. You can see there. Okay, so here we go. Pound against dollar, euro against sterling, pound against Aussie, pound against Canadian dollar, pound against the New Zealand dollar, pound against the Swiss franc, pound against the yen, and the FTSE. And that's what we've, there's been lots going on there. Okay, and so it just makes it very easy for me to get an understanding of what's going on in those markets. And I'm just going to literally just put here. And so, if I look here, there we go, just set these up. What I've got here on the 4-hour chart just gives me a very quick take on the actual what's going on with the major sort of sterling pairs, and probably what you can see is that certainly for the majority of the last week, okay, it's literally been kind of one-way traffic when it comes to the sterling. That's pound against Swiss franc there, pound against New Zealand dollar there, and pound against Aussie there, okay, pound against Canadian dollar, and euro sterling has been going up, which is a sign of that, because it's because of the euro as the base currency in the euro sterling. So very quickly you get an idea of where is there a trend, okay, and at the moment, okay, there's been a real case of sterling being sold off over the last 10 days or so. There's been a really particularly good strong trend, and as I said earlier on, you don't want to fight that trend, okay? You don't want to fight that particular trend at all. And if we have a look at, let's just have a look for let's have a look at, so pound against the Japanese yen. And this is a 4-hour chart here. And this is what I was talking about, is that, I said earlier on that sterling is kind of in the risk on sentiment. And when the risk is off, we'll see the Japanese yen, okay, money will flood to that. And this 4-hour chart here of the pound against the yen has been a great example of that over the last month or so. You can see here, okay, back at the sort of end of May, start of June, price was just rallying up very strongly, right up to this kind of 140 big round number here. You can see there, and that was just an indication that at that time, risk was on across the markets. Okay, everybody thought that lockdown was effectively coming to an end. You were seeing the back of the COVID, okay, and that markets were opening and risk was on. So when the risk sentiment was risk on, we had money flowing into sterling, okay, and money flowing out of Japanese yen. However, we had that kind of changed quite considerably here. I mean, it was a couple of weeks ago now, where invariably what we saw was that there's a bit of a mixture of news coming out of kind of second waves in a few countries. Some of the individual instruments or individual companies were struggling, and invariably a couple of comments by Mr. Powell at the FOMC that he didn't particularly see any kind of interest rate rise happening for a couple of years. And so what we had was then we went to a kind of a risk off mentality, and what we had here was this is a head and shoulders pattern, which is a reversal pattern there. We had our neckline here, and then basically price kind of just traded its way down, and that's what we've continued there. So just within that kind of 1 4-hour chart, we've seen over the last month or so how, you know, that we had a risk on sentiment, which was great for sterling. You want to be able to trade with that. And then we had a reversal. And then as the risk off sentiment sort of spread through the markets, well, then invariably then we saw sterling fall against that and the Japanese yen rise. And so if you look at that, that just gives you a great insight into what's going on in the markets at this particular moment. Now, sadly, we've run out of time today, but I hope you found today useful. I hope it's given you just a little bit of insight into sterling and also how you can trade it and what you should be looking for. As always, I wish you the best of success with your own trading, ladies and gentlemen. And if you're watching this on later on YouTube, if you've liked it, if you found it helpful, then please, give us a like. If you've got questions, please do so. And, I look forward to sort of speaking to you soon. Trade well, everybody. Cheers.